Imagine being able to make an international payment instantly and cheaply. A payment that doesn't sit between accounts, where sender and receiver see the same information at the same time. This is why blockchain was invented, to make that possible. I'm Peter, the Head of Digital and Markets Innovation at Lloyds Banking Group. In this video, I'm breaking down what blockchain is, how it works, and what it means for the finance industry. So let's start with the basics. What is blockchain technology? Blockchain is basically a shared digital record that multiple participants can update and verify together without one organization controlling it. Think of it like a shared notebook. Different people can read and write in it at the same time, but you can't rip out pages without anyone knowing or change what's already been written down. New information is added in blocks. Each block links to the previous one, building a chain of records that's hard to tamper with. Bitcoin made blockchain technology famous. Today, blockchain is a practical way for multiple organizations to share and coordinate records securely. The key advantage: everyone involved can see the same information and trust in a single shared source of truth. So we know what blockchain is, but how does it work? A transaction happens. Say, a friend sends currency to another. That transaction is grouped with others into a block. The network then selects participants, perhaps two different banks, to validate it, checking it follows the rules. Once it's been validated, the block is added to the chain, and the updated record is shared across the network. Because everyone holds a copy and the blocks are all linked, the system is more resilient and harder to tamper with. How might blockchain transform the financial services industry? Currently, moving money and assets relies on a patchwork of banks, payment schemes, clearing systems, and other intermediaries, often operating across different time zones. These middle layers are there for good reasons: controlling against money laundering, sanction screening, preventing fraud, keeping customers safe, and resolving issues. But those layers also add friction, delays, extra costs, and the need to match up records between organizations. Blockchain offers a different and more frictionless way to coordinate, reducing the need for repetitive checks and cutting out the ping pong of data across systems. For customers and financial markets, that could mean faster settlement, fewer manual processes, and potentially lower operational risk. It will open up new possibilities, like making it easier to buy and sell goods or services and cutting through the complexity of international trade. The result: financial services that work better for everyone. In short, it will help everyone upgrade to a faster, modernized digital ecosystem. But what does blockchain look like at a major high street bank? At Lloyds Banking Group, we're exploring digital assets and distributed ledger technology, or DLT, to make financial services more efficient, easier to use. DLT is an important foundation for innovative new products such as digital asset wallets. A digital asset wallet could upgrade your regular bank account, giving you a secure place to store and manage different types of digital assets. Over time, they might hold tokenized assets such as deposits, property, shares, bonds, important documents and transaction records like wills or invoices. And customers could manage smart contracts, automated programmed agreements that perhaps only release money, for example, when certain conditions are met. These can all be held in one secure wallet, making complex transactions simpler and faster. But how do these assets get to your wallet? Through the process of tokenization. Ownership of real-world assets like deposits, shares, property, and bonds is turned into digital tokens on a blockchain. These tokens can then be accessed through your wallet, traded and recorded instantly. And we are proving it works. In December 2025, Lloyds Banking Group completed a UK first. using tokenised deposits to buy tokenised UK government bonds on a public blockchain. The pilot showed 3 things. 1. The trade could settle instantly and reduce the risk of non-payment. 2. Digital and traditional banking systems can work together smoothly. And 3. Tokenisation can make bond markets faster, safer and more efficient. So you can see, while blockchain might seem a bit abstract, it supports practical innovation that makes finance work better for everyone. We can already do a lot with blockchain, but what's coming next? Adoption is going to centre around payments, wallets and capital markets, supported by clearer regulation. Over time, this can be cascaded to all customers. One of the biggest shifts is stablecoins for international payments. Digital currency designed to hold a steady value like dollars or euros. We see tokenised deposits as the domestic solution for everyday UK payments, but think stablecoins will be useful for international and cross-border payments. Digital wallets and smart contracts will help make those services usable at scale. The direction of travel is clear. Frictionless payments, smoother market infrastructure, and a user experience where customers don't need to be experts to take part. The next few years will help define the future of finance in the UK and beyond. At Lloyds Banking Group, we are committed to leading this shift responsibly, collaboratively, and with a clear focus on what our clients actually need and ultimately helping Britain prosper. Working with the industry and with government, we're shaping the infrastructure, partnerships, and regulatory foundations that can make digital assets a force for good. With this focus and approach, the UK can stay a global leader in digital finance. If you want to explore these topics in more depth, you can find more videos on our channel. And don't forget to subscribe to stay up to date.